Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York on Monday, March the 7th, 2016, and we're looking at the Dow Jones Industrial Average closing above 1,700, although nominally above, with a small net gain on the day of about 58 points to close at 17,065.66. We are in settlement right now. Of course, Standard & Poor's also trading higher on the day, but up about 4 points at 1998. 1999 in that area. Of course, we are long the Standard & Poor's. We'll talk about our current trade and our current stop all on today's daily report in trending markets. So traders, if you recall from last week, we did enter a long position in the Standard & Poor's 500 vis-a-vis the E-mini, of course, and that's what we're looking at, which is a daily chart of the E-mini. As you can see, we've just broken over 2,000. We're currently trading as we go into settlement at 2001. And this is the area that to me is the first step, a critically important step also, to really defining whether or not we're going to see U.S. equities re-enter some sort of a bull market. Of course, we entered this trade roughly at 79. So this is 70, here's 80. So just under this blue line right here at 1980, we got in just under that on the open just a few days ago. We put our stop at 65 because it was under the 50% retracement. It was also under the low of the day, and I'm absolutely considering moving that stop up, but we've got to look at where the lows are right in here, which are probably at about 85, somewhere in that area. I will send out a special trade alert should we go ahead and move that stop up. But here's the key, and here's what we want to look at. We have oil, which has begun to move back up. We have this market, which has just been on a solid move to the upside and has been doing so since about the middle of February, when we consider that back in January and February of this year, we were under tremendous pressure. We talked about the fact that what we saw was very similar in terms of a straight pattern to what we saw during the August meltdown, and I have to compress this chart a little bit to show you that. In fact, let's go ahead and do that. But that was, in essence, what we saw was a W forming. In other words, the market came down, hit these lows, then it had a rally, but it was a short-lived rally because we went and then came down to a low, this low being above the prior low, so there is a distinction, and then we were off to the races, so to speak, because once we hit this secondary bottom here, what we actually witnessed was a tremendous rally, not only breaking above our 50-day moving average, but our 200-day. But that was to be short-lived, as you can see here, because we had another meltdown, also predicated by uncertainty in China. Market comes down and actually makes a lower low than these previous lows here, which was quite discouraging to many traders, including myself. We came up, and then we found some real resistance in the market. The resistance came in roughly at a 61% retracement, or 1937. Came back down and had, I would say, about an equal low. The low might have been off or lower by a tick or two, but in essence, you know, the best we can say on something like this is fairly equal in terms of these lows. And then we were off to the races. And what I mean by off to the races is we exceeded the former high, just as we had this high here and we had this high here. We exceeded that. You'll notice that this high here came in at a 38%, that 2003 right in here. This one came in at a 61% retracement at 1937. And as I said, now we've moved well above our 50-day moving average. That's absolutely critical. And now the real question is, will we have the momentum on this rally to go and move back above the 200-day moving average? Traders, maintain your current long position. We're in at 79. Our stops are at 65, and I kind of do want to look to move them up. If you want to do that on your own, you want to put them below 1985. That is the low of the candle today. 1985, and that is the suggestion or my recommendation if you're going to tighten your stops as to where you want to put them. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.